a little bit about myself. I call myself a investment coach, a growth investing coach, more specifically because I'm using options to generate higher returns, or to look for alphas in terms of returns for investors like yourself and myself, so that we can all work towards our ultimate investing objective of being financially free. So options is just a means to do that. But what exactly is options and how is this process? We'll talk about it in a very short while. I am formerly a corporate warrior. Now having decided to leave corporate life because this is really what I was as a corporate person. And I suspect many of you can actually relate to this picture. Okay, so this is not a doctored picture. This is a real picture of the person that you're seeing on the screen. With the background, no day, no night kind of background, can't even eat properly. So with a backdrop like this, obviously you can already guess that I don't get to see much of my family. Don't even talk about having my own life. Don't get to see much my children. Don't get to see much my spouse. Don't get to see much my family. Missed out on a lot of occasions, a lot of anniversaries and all and whatnot. Okay, so of course this is, as I said, this is me back in 2006 in this full-page Straits Times advertisement. The caption of the ad is actually quite cryptic. So the tagline says, "Get your life back." So I needed to get my life back. Of course, if you see like this, you can appreciate that the what they call the creative agency has taken a bit of creative license to exaggerate a little bit. But if you can relate to this, then chances are that you are someone already like me, or currently, or having gone through this process where you are basically slogging your life away, and then maybe not enjoying your job, maybe you're looking for a way or a different way of life, and that's why you're inside this session to understand a bit more about whether or not options, or how options can help you. Okay, so not to say that I've had a shitty corporate life. I've actually had quite a colorful corporate life, so to speak. Having worked in big and small local and multinational corporations in all kinds of challenging but very rewarding roles, and different kind of industries. So my last job was as in the public sector before I decided, hey, enough is enough. I need to get my life back. I need to call it quits. And therefore, I needed to look for a way out. Of course, by looking for a way out, it doesn't mean just drop everything without a backup plan, right? So my backup plan is to find something that can actually generate a regular income for me, and not to have that big an impact on my own quality of life or way of life if I should leave corporate. So for those of you who are still in corporate, I would say that Warren Buffett's words of wisdoms are really, really true. We all need to find a way to make money when you sleep. Otherwise, you will be working yourself to death, and then you will not see a way out. In fact, I wish I had, come across this saying when I was younger, and so that I can take actions earlier. I can start to make this kind of decisions earlier, and maybe have a slightly different outcome. But what's done is done. What's past is past. No point hanging on to what's past. It's how I can make the best of whatever time I have left now and moving forward. And options is definitely the way to go for me. And the solution I was looking for, I had to satisfy these three criteria. It must be able to generate a regular income stream. As with all investing, number two, as with all investing comes with risk, but I have to accept that all investing comes with risk, but the risk must be within a reasonable or a threshold that I can accept. And it has to be a system where it works in whether the market is going up or going down. It cannot be only when the market is good, then I can make money. If market is no good, like the past 2 years, then I tell my children, sorry, nothing to eat for this month. Cannot be, right? So it has to satisfy these three conditions. Okay, so but was it all plain sailing? The answer is a resounding no. It's not plain sailing. In fact, I started this journey after I left corporate 2017, right? So it's been what, 5 years? It's been more than 5 years. And the first 2 years were really challenging, but the challenging years were also the defining years where I made mistakes. It was really the part of the learning process. And I'm glad that, in a sense, looking back, I'm glad that it has happened that way. And today I'd like to also let you folks know that when we talk about options investing, what Emin and I are really saying is that it is not just options investing. We're actually here to share about a complete process flow, which I shamelessly call it the FATS process. Of course, in this day and age where you need to be politically correct, but I would say that I will still use the word FATS because I don't mind having a lot of FATS in my wallet. I don't mind having a lot of FATS in my trading account, in my portfolio. What does FATS mean? It is really about understanding what you are as an investor, what's your risk appetite, what's your profile, what do you like to, or what kind of stocks or what kind of sectors you like to invest in, using that understanding to help you analyze good quality stocks or ETFs that meet your kind of criteria, and then using technical analysis, TF for short, to assess when is a good time to enter. What price should we enter? What price should we set our option strike price or contract price at? And then finally, to cap it off, the last mile is using the right option strategy to execute your trade, to enter into a trade, and using the options as the last step towards your income generating process. The last but the most important step. Okay, so what is this FATS process about? To delve a little bit more, what we are here offering you folks today is a complete process where you're able to invest, not just using options, but how to invest properly with options as the end state, with the final important step of executing a trade and achieving the kind of investing outcome. When in this case, be it using options to generate cash flow in the form of premiums when you sell an option contract, or using option to sell a contract, and using options to, after selling contract, to potentially get the stock at a low price. Okay, so the step one, which is the F part of the FATS, is really about fundamentally what kind of investor you are. What's your circle of competence? This is the keyword I'm trying to drive at here. What are you good at, or what do you like? What's your circle of competence? If let's say you're already someone working in the finance sector, or you really like the finance sector, then your circle of competence will likely be in banking and finance type of companies, or the old traditional type of businesses like your Bank of America, JP Morgan, for example. Or you could actually expand into like maybe the emerging fintech kind, your Square, or your Square is now called Block, or maybe your payment providers like your PayPal, your Visa or MasterCard, or your blockchain, for instance. Okay, so when you have a circle of competency, you can expand your expertise. You don't just you need not confine yourself to just one narrow aspect of a sector that you like very much or you're familiar very much. From there, you can actually expand. Let me give you another example. For myself, I like technology, and because technology is such a big sector, right? I like within the technology sector, I like the domain, the subdomain, the electric vehicles. So having read up a lot about and sort of understood a fair bit about electric vehicles, I need not confine myself to just invest in Tesla or the biggest EV manufacturer, which is a China company called BYD, or your new type of companies. I can also look at, what does EV rely on? Batteries, right? So I can look at battery providers, battery providers for the EV sector. I can also look at infrastructure plays like your charging, like businesses or companies that are in the space of providing charging points for electric vehicles. So when you have a circle of competency, you get better and better you expand your investing horizon, you can actually look at not just the direct businesses, but also the supporting or the complementary business, the ancillary businesses. Okay, so that's why having a COC or circle of competence is fundamentally very important as investor, because the more you read up, the better you are at understanding a sector, the less likely you will make a mistake in terms of choosing lousy stocks. Because even if you have to make a guesswork, the guesswork is very likely to be based on educated guess. So there's much less chance of you actually getting your guess wrong. So that's why I can't emphasize enough of knowing yourself, knowing what's your circle of competency, or COC for short. And then once you have gone through the F part, the A part, analyzing, when you know what kind of investor you are, what kind of sectors you like, what's your risk profile, you will then use good tools, screeners, to help you screen out stocks that meet your criteria. So just to give you folks a flavor, these are the 5 criteria that I use. Okay, I look for companies that satisfy, number 1, that have proven themselves to be able to grow their earnings over the past 5 years. Number 2, I look for companies that have demonstrated an ability to deploy their capital efficiently. That's why they are able to deliver an ROE in excess of X percentage. I look for companies, number 3, that are not overly geared, not highly geared, because I don't want to invest in a business. Every $1 profit they earn, they have to pay 50 cents, 80 cents to the bank because they are over leveraged. They have very, very big loans to service. I look for companies that have pricing power, even in an inflationary environment like this. Even if they raise the price, they won't expect to see a lot of their customers run away to their competitors, because they have the kind of pricing power. And I look for companies that are fundamentally strong in terms of cash flow, because cash is the lifeblood of any business. Having strong cash position means that they are in a good place to be able to maybe make capital expenditure, invest to grow the business, or even buy out competitors to future-proof their business, or even to pay you a dividend if you so decide to become a shareholder or buy the shares. So that's the A part. Analyzing is a little bit on the part of fundamental analysis, or FA for short, and then we come to the TA part. Okay, so this program that we're offering covers helping you to understand what you are, fundamental analysis, and also a bit of dynamical analysis. We are not here to make you an expert in terms of TA charting, but we are just here to help you know enough to be able to do what is necessary. Okay, at the very least, when you look at the candlesticks here, you know how to draw trend lines. You know how to identify what's the support, what's the price floor, what's the pricing, or the resistance, and then to identify good entry points to do your options, which is the last step. Okay, so you're not expected to become experts. We don't need you to become an expert. We need to know enough for you to be able to proceed, and then to use this tool efficiently. And then comes the most important step of it all, S, the strategy part, the option strategy, the last mile, the last important mile of this FATS process. What is the right option strategy to use to help to achieve the investing outcome that you're looking for? If your investing outcome is, like myself, to have consistent income generation, then we will perhaps use more of this strategy called sell puts, which is a basic option strategy, which Emin touched on just now. In fact, as part of this program, you will be learning at least 3 option strategies, 2 basic, 1 advanced. These are the 2 basic strategies: buying call, selling puts, and doing a vertical spread, or what we call vertical credit spread or bull put spread, where you can actually use a buy put and a sell put together in one trade that offers you a little bit more protection in case of a price drop that may threaten your option trade. Okay, so these are the 3 core strategies that will be that you will be learning, acquiring, and practicing as part of this program construct. Let me just show you a little bit more about what each of this strategy is about. Okay, so what is a buy call? Earlier on, Emin has showed you the payoff table. Now, using a real example where I entered into a buy call contract on this Apple option. Now, earlier on, Emin shared that you don't necessarily actually have to exercise the option. I can actually use option to even generate capital gains or returns, capital returns. How is that so? Now, if you look at this example on where I did weekly options, okay, on this day, I entered one option contract on Apple. I paid this amount that gives me the right to buy 100 shares of Apple on this, that is expiring on this day, 20th of Jan. Okay, this is what we call a long or leap call, a very long call contract. Now, today, as in like 2 weeks later, because Apple price, the Apple market price went up, my option, if you can look into this particular what you call statement, I paid 48.50 times 100 shares, so it's 450 for the right to buy 100 Apple shares that's expiring on the 20th of January 2023 at the price of 95 per share. So even if Apple share price shoot up to 200, 300, 1,000, doesn't matter. I can, if I choose to exercise the Apple option, I can still buy Apple shares at $95 on or before this day. But if let's say I do not want to fork out such a big sum of money, for instance, I don't want to put down 9,500, I just want to make capital gain on this option contract, I can choose to close this option trade at $55.42 or 45. So based on this option contract, I'm already sitting on a paper profit of close to $700. So investing using or taking a trade using option can already allow you as an option investor to make capital gains without necessarily having to exercise the option contract. So this is what I mean by, or this is what Emil was saying just earlier on. You can actually use option. You don't necessarily have to exercise the option. In fact, a lot of option investors do not actually exercise. They actually close the position early and then take a profit from the option trade. Of course, if I choose to, I can, but it is if I were to do that, I will have to be prepared to put down $9,500 to exercise the contract and to buy up the 100 shares. Okay, so the leverage effect is this: if I were to close the option trade, I will be making an ROI of about 15%. Okay, so which options actually allow you as an investor to actually enjoy, right? So that's option strategy number one, buying a call. So just a quick recap. This is what a payoff table of a buy call looks like. If the option will become profitable and valuable if the underlying stock price continues to go up and up, and therefore allowing you to theoretically and potentially have unlimited profit. Now imagine this: if your contract allows you to buy at $50 and the underlying stock price shoots up to, let's just say hypothetically 1,000. So this is what we call bitang. That's why it's unlimited profit. You can exercise your option contract and buy $50 and sell it in the open market for $1,000. So if it goes up to 2,000, 3,000, or let's just say theoretically $10,000 a share. That's why profit is theoretically unlimited. Okay, so that's what a buy call option allows you to do. Of course, how did I decide what is the strike price of $95? I look at the option table and I also use TA to help a little bit. So I will identify what is the support. That means what's the price to give me a gauge where and when not so much when, but where to enter. Okay, so the support is at this level 123 if I want to go a bit further, or the more recent 138. But if the option table allows me to choose at an even lower contract price, or what we call a strike price, I will actually go for it, and thereby giving me potentially even better returns. Okay, so that's option strategy number one. Strategy number two, which is what will be part of your curriculum, part of your learning, is what we call a selling put. Now, a sell put is an obligation on the part of the put seller. Let's say if I sell a put, which is in this case, again, a weekly contract. On this day, I enter into 3 contracts of Citigroup, which I sold, which expires 2 weeks later on the 3rd of July. And at this point, when I sold the put, I already collected $126 premium upfront. Now, what I was betting on is, on this expiry date, Citigroup share price will close higher than my contract price, or the strike price of $70. So indeed, on 2nd of July, at the close of the market, Citigroup closed at $70, which is 70.41, which was higher than my strike price of $70. And therefore, after the trading platform, the system does all the reconciliation, it determines that my 3 contracts that I had sold will expire worthless. Means nothing happens to me. The $126 that I collected 2 weeks ago became cash flow that is confirmed, double confirmed, triple confirmed, mine to keep, which I will then use to plow back into my trading account, and then use it to reinvest, to sell more contracts, and to generate even more cash flow for myself. All right, so this selling puts is actually a very powerful investing system that many options investors, options traders have actually used to generate cash flow month in, month out, week in, week out. Okay, so this is what is going to be part of your learning if you decide to join us in this mentorship program. So the payoff table again, if you sell a put, we're actually betting on the price to either go sideways or continue to be bullish, to continue to go up. So as long as it goes sideways, it doesn't touch your contract price, the premium that you collected is yours, confirmed to keep and to reinvest. The only danger is, in this case of sell put, okay, it's not unlimited loss, it's just maximum loss. If the contract price, if the market price of the underlying stock drops, then you just have to stand by your money to buy. And that's why, as part of our teaching, we will always emphasize, do sell puts on fundamentally strong stocks, or stocks that you like anyway, that you're prepared to own. So if the stock price drops, it is in a sense, kind of situation for you, because instead of having to buy at the current market price of this, enter in the contract, you collect a bit of premium, and you enter in a contract that compels you to buy at this price if the market should drop. And if the market actually drops, you will be forced, as part of your contract, you'll be obligated to buy at a low price anyway. So in a sense, this selling put is a very powerful system that can potentially allow you to buy the stocks that you like, the stocks that you want to have in your portfolio, to maybe to grow your portfolio over the long-term horizon, that you'll be able to buy at a lower price rather than at a future date, rather than having to pay a slightly higher price today. So that's why I say selling puts, it can be is actually a very powerful system. If you know how to use it properly, you can actually use it in the most effective way. And how did I actually settle at a price of $70 to enter for Citigroup? Again, using TA. I use TA. Okay, ideally I should be entering at $66 or $65 as the support price, but unfortunately in the options table, the 66, this kind of pricing, this kind of contract prices were either not available, or they were not attractive in terms of the options that they offer. So that's why I settled for the risk adjusted strike price of $70. Okay, so That's the two basic option strategies for you: buy call, sell puts. The third option strategy, which is the more advanced strategy, is this bull put spread. Okay, or what is technically called a vertical credit spread. Why is it a vertical credit spread? Is because I sell a put, I buy a put in one single contract. The sell put is for you to earn a premium. The buy put is to act as a protection. It's like buying insurance to protect against in case the stock price drop. The buy put can come in and protect me and limit my losses. Okay, I will still suffer a bit of a loss, but the loss is capped at the level where it's palatable to me. Okay, so this example is again using example and using weekly options. On this day, I sold 20 contracts, collected this amount of premium. When on the expiry date, which is within the same week, on the Friday of that same week, I was betting on Apple share price going higher or staying bullish, and indeed it remained at a high. The strike price is higher than my contract. It closed at a market price is higher than my strike price or the contract price, and therefore the 20 contracts expired worthless. That means the money that I collected upfront on Monday, the $220 premium that I collected, was money that I happily get to keep, and then I use it to reinvest, plow back into my account. I use it to reinvest and to help me generate more premiums moving forward. So these were the three options strategies that will be part of your learning process. Okay, so let me just talk a bit about what is my report card. So how has options actually helped me? Okay, if you remember what I said earlier on, my first 2 years were very much like trial and error, and also learning years. But from third year onwards, it was more stable, and I was able to, on a average basis, I was actually able to generate this kind of returns using options. So my average monthly return is about a cash flow that I generated by selling weekly and monthly options is about 6,000 Sing on average. Okay, so now what is my intent of showing you this? It is showing you what is the possibility of you generating a consistent cash flow for yourself. Now, this kind of results, I will just let you folks know, it is not the exclusive domain of full-time investors like myself. Even for part-time investors, okay, it is still a possibility. Now, what I want to say here is this: if you give yourself enough time and you are committed to practicing, there will come a time where you can also have this kind of results. This is not just the domain of full-time investors like myself. Even if you're going to do options investing on a part-time basis, this kind of results are possible for you. Let me share with you what is my wife's results. Okay, she started back in around July, August. Okay, this is not the most updated, but within a short span of 5 months, she was able to, and she's not doing this on a full-time basis. She has a full-time regular job. Okay, just that at night, she's bugging me every night. Hey, what to invest, huh? What to do options on? Okay, so I just give her some guidance. I just give her some ideas, and I'll just say, why don't you follow my trade? And that's what she has done. So purely on options alone, she has, over a course of 5 months, she has generated this amount of returns on options. Okay, and that's not counting the 8,000 over that she has made on capital gains from selling stocks that were either she buys stocks and then sell it outright, or she get the stock from options that were assigned to her. Then she waited for a while for the stock price to rise up, and then she sell the stock for capital gains. So this is the kind of results that option has given her. So if she can do it, I'm pretty confident that if you give yourself enough time to practice and to really learn and to try, you can also reach this kind of, this kind of level, this kind of state in time to come. Of course, we must be realistic. You don't I always advocate crawl, walk, run. Okay, start in a progressive manner. We learn to walk by starting the crawl first, then we walk, and then we progress to running. Of course, when you reach the stage where you're able to run, just like in the option speak, right? You would have reached a stage where you are really very confident. You're making very good turns, very good gains. So to kind of piece it all together, my four-step FATS process is a bit of a mouthful. My four-step FATS process is designed to help you to have a better than average chance of, one, having the ability to generate consistent income flow using options, and number two, potentially getting for yourself good quality stocks or good companies, because I've used options, and through options at some point in time, I have been able to generate or buy, kind of forced to buy good quality stocks like Intel, PayPal, Square, Twitter. Of course, today I've already divested all of this. I don't have any more holdings except for maybe PayPal and Square. Okay, okay. But if you were to use options, you can also potentially use options to buy into good quality stocks. It doesn't have to be Intel, doesn't have to be PayPal. You can also buy other good quality stocks. So options actually has the ability to help you to achieve that kind of outcome. So what is the process like? How long does it take? For me, it took me 4 years, but if you were to come on board, I can assure you, you can actually take much shorter period of time. Of course, there's no shortcut to investing time and effort to learn, but all of us will have to go through this process. As a beginner, you will be acquiring knowledge, understanding it, applying it, practicing it, and then you analyze, you ask yourself, what did I do right? What did I do wrong? What are the lessons I can learn from the doing wrong? Fusing your knowledge and understanding, and always asking yourself, how can I do better? And then you will reach the stage like myself where you are very, very confident, and you can potentially one day call yourself an expert, and maybe be able to coach other people to help them to embark on this option investing journey, like I have for my spouse, and maybe for you, for your spouse too, or for your children. Okay, so it took me 4 years, but you can actually, I'm confident that if you can actually have the confidence that you can actually do it shorter. Why? Because I'm here as a coach to help you to avoid all the mistakes that I made, and to help you, to point you on the right path, and to tell you what you need to do correctly, what are the steps to get to where you are, the kind of the destination that you aim for, and so on. Okay, so I've shown you my results earlier on, and this is the kind of outcome, the quality of life I'm having right now. Okay, so compare that with the very chuan face that you saw at the beginning of my storytelling, my sharing. I'm visibly much happier now, and as Emin has said, I have a big family. I have 6 children, 4 human and two of this kind. Okay, 4 human and 2 of this kind. So I need to make sure that I bring in enough, and in fact more than enough, to have a certain quality of life. Okay, so I'm glad to say that of course I aim to do more. I aim to eventually reach a stage where I can use options to become a millionaire, but that is still very much a work in progress. But comes to the question of, if you're asking this question in your mind, can you be successful and if you do options part-time? The answer is still a resounding yes. If you are prepared, you have to be prepared to invest the time and effort, because you want to be financially free. Financially free is not free. You need effort. You need to invest time. You need to invest effort. As long as you're prepared to do these two, you need to invest time, invest effort to learn. I can assure you that you're already starting on the path towards achieving this kind of outcome. Maybe one day you can even do better than me, which is not something that which is something that I would be very proud to say that, because it also means that 名师出高徒, right? A good teacher can, if you're a better student than the teacher, this is something that I would be very proud of. Okay, so the final word that I want, the final parting word that I like to leave for you folks is, please ask yourself this question hypothetically in your mind. Think of this situation, think of this scenario. If you were to meet your younger self today, your 20-year-old today, what do you think your 20-year-old will tell you? Okay, that means, will your 20-year-old tell you, hey, can you please start to invest earlier? Okay, can you? Oh, no, wrong. Will you be able to tell your 20-year-old self that, can you please start investing today, so that 20 years, 30 years from now, when you meet me, I can say thank you to you? Okay, so if you are thinking about investing or how to chart your financial future, don't procrastinate. There's a saying that I came across recently, which I think is very true. Procrastination is the thief of time, the thief of time. Okay, so don't procrastinate, don't delay anymore. If you think that you need to start something, do it today, or make the decision to embark on this today. And I hope, and I hope to see you in embarking on this, whether it's with us or you're doing something else. But start something today. If you are seriously already thinking about options, okay, do start to do something for yourself that you, in the future, you will have yourself to thank for.